Hello and welcome to this ET Now special broadcast. We have a very big guest with us today, CII President and the Chairman Managing Director of Kotak Bank, Mr. Uday Kotak himself. Mr. Uday Kotak, thank you for giving us this interview. We're talking at a time when India is perhaps ready to start unlocking in phases. We now have a vaccine for the coronavirus, which, albeit is in shortage, is being ramped up, is being imported. But I want to focus with you today on what is the ideal economic vaccine. The first wave and second wave are so different. Second one being deadlier, the fatalities, the way we have all been affected. Add to that, at least from the economics point of view, you've also got inflation, which is now prevalent in 2021. Mr. Kotak, what is your prescription for growth, your prescription for the economy?
Thank you, Nayantara. I'm first wanted to share with you and your viewers that I complete my term at the CII on 31st of May, after which Mr. T.V. Narendran, Managing Director of Tata Steel, takes over as CII President. Of course, I will continue to be engaged, but I just wanted to share this with you, that it has been a truly uncharted year behind in terms of where we started and where we are 1 year later in this pandemic period. And when we, rather than looking behind, if we look at where we are, I think science and health will disproportionately determine where we go from here. Therefore, on the whole issue of science and health, the COVID numbers currently, which are about 2 lakh positive a day, based on predictions, by end of June should come down to about 50,000 a day. We will then be in a very interesting dilemma about how fast we open up versus vaccination and capacity building should there be a COVID 3.0. My personal view is this time our opening up has to be very calibrated based on expert advice and specifically focused on our capacity to handle COVID, both in terms of oxygen, hospital beds, and medication. I would much rather we store the supplies as surplus, and even if it leads to wastage, because wastage cost of that is much less than cost of losing human lives. Similarly, on vaccination, we need to pick up. We are probably 3 to 4 months away from now, after which we will get a little more comfort on the percentage vaccinated. Therefore, by the time around September, October, I think we will reach a point where we would have reasonable vaccination plus COVID positive peak cases and immunity thereof for us to be comfortable. Therefore, this 3 or 4 months is crucial in getting the balance between lives and livelihoods. And looking at what COVID 2.0 has done and the fear it has created in the minds of states as well as individuals, I see the opening up as gradual and calibrated as vaccines pick up and hopefully the variants are also under control. Therefore, economic outcomes will depend on that. And if we take this forward, if we are seeing some sort of a normalization on vaccination and calibrated opening between now and September, then by September, we should see economic activity normalize significantly. And my expectation of economic outlook is by end of March 22, the size of the Indian economy will be the same in real terms as it was in March 2020. Therefore, we saw the first year at around minus 8% GDP. The second year, because of COVID 2.0 and its impact, I would say that the growth rate should be currently around 8 to 9% for this year, which takes us back to a total close to 100, which is what we were in 2020 March.
So you think by the year of this end, the Indian economy will be back to pre-COVID levels where we actually were. Mr. Uday Kotak, if I could talk to you a little more about that. I'm happy you've given us an assessment. Your assessments are always taken so seriously because a lot of us are also spooked by other reasons. The tragedies have been very real. Also, we have to deal with a lot of other factors now. For example, whether it is inflation, whether it is the strengthening US dollar, the super cycle of the commodities that we are seeing.
Okay, I believe inflation in India will pick up sometime in 22. By March 22, our estimate of inflation in India is at about 5.5%. But our view on monetary policy is that it should continue to be accommodative through calendar 21, at least till December 21. And thereafter, if at all, a very gradual correction and normalization as I see it. On the other hand, global inflation, there is a debate out in the US led by the Fed itself, who believes that inflation is transient, but many market experts believe that this is more structural than transient. I am of the camp that years 22 and 23 are crucial. Inflation will be higher, and we will have to deal with the inflation issue in calendar 22 and 23.
Okay, if I could also just pick up on all of this, when you also talk of the Indian economy returning to pre-COVID levels by the year end of this fiscal, and it's something to really smile about as well. It's good news in a way because there's so much gloom and doom that's out there. Mr. Uday Kotak, is this assessment also based on the fact that we will need a helping hand from the government, a stimulus of sorts, maybe not reforms the way that we saw in 2020, but more direct stimulus and maybe many stimulus measures?
I think the government will have to expand its fist. The good news is the budget of 21-22, the finance minister was very conservative in her income projections for 21-22, and the revenue will be better. She has also got more dividend from the RBI. She has got credit from Food Corporation of India. Therefore, there are significant credits which are coming. At the same time, all of the expenditure may not happen to the extent expected. And therefore, as long as the privatization and the disinvestment program comes to around the levels it has been planned, I think within 6.8%, there is fiscal room to expand and give some support to the economy. I would like that support to be in two parts. One is for the bottom of the pyramid, either in terms of kind, which is food, or medical guarantees for medical costs, or actual money for medical costs. And of course, the Narega scheme, which is going on, and I think that needs to be also strengthened. And additionally, if required, even direct cash to the bottom of the pyramid. We need to be out there to support the weakest of the society at this point of time. So that is point one. Second is support to the stress sectors through an ECLGS expanded scheme. The earlier scheme was 3 lakh crores, which the government had announced, and currently used about 2 to 2.5 lakh crores. Time has come to expand it, and I would recommend going up to 5 lakh crores.
$5 lakh crores under the ECLG scheme.
Yes. Yes.
And is the markets, the industry's expectation also that this is not the time to worry about fiscal deficit, that a government which has been fiscally prudent till COVID should now really loosen the purse even more?
I think it's absolutely critical to ensure that we support the economy at this time, because we need to ensure trend growth comes back quickly. If we underspend now over the next 6 to 9 months, we will have a long-term impact on our trend growth. Therefore, now is the time to ensure that we keep the economy buoyant as we come out of COVID 2.0 gradually.
What is CII's recommendation? When would be a good time for the government to come out with a package which could be as big as 5 lakh crore rupees as you're talking about? Time it with the unlocking, time it post the unlocking, because the chatter in New Delhi has been a concern that what if we loosen the purse string, start giving stimulus measures, and they don't pay off simply because we bounce back so fast?
I would say that it has to be calibrated again, but we should start as soon as possible.
So start with the stimulus measures as soon as possible. Mr. Kotak, in your assessment, what would be these stress sectors? What is industry's expectations? What is CI's recommendations that need to be addressed ASAP?
I think there are a number of stress sectors. There is MSME sector. There is unsecured consumer who has borrowed and has problems paying back. There is the airline sector, the hospitality sector, all the COVID affected sectors which we are aware of. What we also have to keep in mind is broadly sectors can be divided into two categories. Sectors which are currently under pain, and once we are past the pandemic fully, these sectors will bounce back. So it is a transient pain. The second is many sectors are structurally changing. The industry dynamics are changing forever. And in those sectors, the pain is going to be much more. And how we are going to ensure that companies come out of this or do not come out of it at all, and how do employees in those sectors get reskilled for new jobs. All these are planning measures which we need to take.
Mr. Kotak, you've talked about the vulnerable section, the bottom of the pyramid. You've talked about the sectors. But I want to come back to another point, which is that given the uncertainty, is the industry also hoping the government does something as far as demand goes? The expectation is discretionary income is going to be impacted. You've seen coronavirus also going to now rural parts of the country. In 2020, most corporates were planning growth in rural India.
Nayantara, which is why I am suggesting a deeper direct cash transfer to the bottom of the pyramid, including in significantly in rural India. And that will also help consumption demand.
And what can be done for the middle class? You talked about.
On the middle class, I think if they are in the job market,
and I'm guessing when you were talking also about direct tax cuts, that could be for the middle class.
For the middle class, if you protect their jobs, which is why you need to go out and support the MSMEs and stress sectors by government guarantees and go out and support them. And that will protect the jobs.
But Mr. Kotak, we will also have to therefore, but won't we also have to assume that there will be some, we talked about the RBI surplus dividend and all of that, but there is also an underlying assumption that you're making that we will have proceeds from disinvestment, because yes, there's so much excitement in the capital markets, the gush of liquidity, but just the strategic stake sales, the big ambitious plans, they seem to be under threat.
I would like to compare the state of the capital markets to a gushing river water. Take bucketfuls of water as soon as you can. The water is flowing, take it. And please recapitalize balance sheets, whether it's governments or public sector or private sector. Don't miss this opportunity. The gushing river of capital which is flowing is not going to be necessarily so strong over a long period of time.
Okay. You had made this clarion call, I remember in 2020, to your peers in the banking industry and to NBFCs also, to not miss that opportunity to recapitalize so that we could have money going back into the economic system. So it's the same clarion call that you're making. And Mr. Kotak, we did see some recapitalization, but maybe not enough.
See, if you look at the banking and the financial sector through 2020 and 21, many players have raised capital, which is why the financial sector's capital position is much stronger today than it was 1 year ago. I say capital is the oxygen of the financial sector. Similarly, the governments of the day also must utilize the positive capital markets and raise their monies.
Okay. Now, what's also going to happen is with America coming out with the bazookas that it does, China also making so many orders as far as infrastructure goes, because every country is trying to pump prime the economy. India will also be competing with that. We're in the midst of the super cycle of the commodity markets. pardon my language, but banks, we are told, still have not seen the kind of credit growth that they should have, that they're not increasing working capital limits and borrowings and all of that. What's the solution for this?
I think today banks are ready to lend to good credits. The good credits don't want the money. The problem is reverse. They are not drawing down. And on that note, I must also give one other positive signal for the Indian economy, and that is exports. If the world is booming, India has a great ability to export, particularly when we have surplus capacity in Indian industry. If you look at the steel industry today, despite the fact that domestic steel demand is subdued, steel sector is doing wonderfully because global steel prices are higher than domestic prices and the demand is great. Therefore, exports today is one of the big pluses for India to be growing out of the current economic challenges.
And do you think that with the US dollar weakening as we have been seeing, should the RBI look at all for limiting the gains of the rupee?
My view is that at this point of time, a weaker US dollar is a reality. When a country prints money like there is no tomorrow, which is what the US is doing, it is bound to affect the value of its currency and relative to the rest of the world. And therefore, a weaker dollar and therefore a less depreciating rupee is the new reality. And we should be aware of that, which also gives us the ability to actually monetize our deficit and the RBI to expand its balance sheet domestically as well.
So what if you could make recommendations, what could it be on this front?
My view
because
is
this is going to be the new reality.
My view is don't bother too much about the rate of the rupee and the dollar. Go out there, export like hell. The world market is buoyant. India has surplus capacity. India needs GDP growth. And whether demand comes from here or outside, it will help Indian industry and create jobs in this country. And we should be going hell for leather for export. And I think we should become much more globally engaged. Just as the world markets are helping us today by keeping their markets open for our exports, India should be bolder in terms of expecting a competitive situation on imports. Excessive protectionism, I think, is not something which India should encourage.
Okay. That's a great message to have there. Like I said, it's always great to speak to you because you really cut through all that gloom and doom. And Mr. Kotak, with that, I'd like to ask you one question. You know, this is considered to be India's decade. Now, there is obviously gloom and doom because of the second wave. Do you still stand with the view that this is India's decade? Because things have gone horribly wrong in the last couple of weeks, and we should acknowledge that as well. And how can we seize our moment again?
I think India has to work on the global challenge which the pandemic has thrown for us at this point of time. So the last 2 months have been rough for India globally. One of the first ways to get better is to accept the facts in front of us. Once we do that, we have to say, how do we grow from here? So whether it's government, whether it's regulators, we should not have policies which are inconsistent with best-in-class global policies across a whole range of areas. And this is something I would recommend for India to be out there as the world-class country. We need to ensure that we have world-class policies and execution to back our points. We should respect science, we should respect knowledge, we should respect institutions and support them to make India a world-class country.
Because, you know, there's another side to all of this. When foreign investors come to India after just the last couple of months, we have to assure them again, we have to allay their fears that no, we're better than that, that has been an aberration, it's a mistake that's not going to repeat. That's going to be absolutely critical.
So, Nayantara, our actions must speak.
Yes. So let's hope they do start speaking. Mr. Kotak, before I let you go as well, we started this interview by saying that the economic outcome is going to be determined by health and science. And we need to accept that, and we need to accept if there's going to be wastage of supplies, so be it. I want to end this interview also by asking you, what can the private sector do when it comes to the vaccine program? You're talking of a calibrated reopening. The US Fed chairman, for example, has said the best stimulus can be vaccination for everybody. What is the role the private sector can play?
Yeah, Nayantara, here I have a view on the whole vaccination strategy which we have. We have announced a three-pronged strategy, which is central government 50%, state governments and private sector in the second and third buckets totaling to 50% without any splits. My personal view is the vaccination strategy needs to be simplified. Bucket one should be central government purchasing, say 75% of all vaccines at a price somewhere in the range of between 150 and 300, whether it's 250, 300, whatever it is. But one price for 75% of purchases by the central government. And the balance 25 for private sector to purchase and vaccinate its people. And divide it instead of a three-way policy into a two-way policy. The three-way policy is creating challenges because states are unnecessarily competing with each other and with private sector at the same time. And let the central government equitably distribute out of 75% to all of India through the government sources, and private sector can vaccinate from the 25% bucket. That will lead to less confusion and get clarity on the vaccination policy going forward.
So basically, everybody competing, everybody obtains and then goes down the pyramid.
Yeah, and therefore make it 75-25 formula, 75 with the central government equitably distributed with states and 25% private sector.
And do you have a view on how the center should distribute it among the states? Should it be where you have more cases? Should it be where it's logistics, where it's an aging population, a younger population? How should it be?
I think the center already has a process for 50%. Ensure that it is increased to 75%. And the decision making and allocation is non-political.
One of the biggest lessons from this pandemic that we must also learn is to invest in our health infrastructure. Any parting advice on that front, how it can be ramped up? And we need to ramp that up very, very quickly, while equally focusing on so many other fronts.
Which is why I said our ability to open the economy is linked on our ability to build health capacity for a potential third wave. And that has to be the priority over everything else at speed. It's not a long walk. It's a heart massage we need to do for improving our health infrastructure. Great.
With that, Mr. Kotak, I'd like to thank you for giving us the time here as CII President. I don't think any CII President has had it tougher than you. Look at the year that you had to chair and steer the CII industry, engage with the government. It's always a pleasure talking to you. Thank you so much, Mr. Kotak, for this interview, and we look forward to many more in the near future.
Thank you, Nayantara, and all the best. Bye.